Hi everyone. We already learned the concepts under IND AS 2 inventories. It's time for us to apply that learning with the help of several questions and case studies. We are provided with this information which says that Popular Limited acquired raw materials at the rate of 600 rupees per kg. The acquired raw materials are used in the manufacturing of finished goods and are never sold to third party as raw materials. These finished goods are expected to be sold at a price below cost. 10,000 kgs of raw material is still in the inventory as at balance sheet date. The selling price of raw material is not known as the same is never sold separately. Accordingly, the realizable value of raw material cannot be arrived at for inventory valuation. Current replacement cost of raw materials is 500 rupees per kg. The question is, how will the value of raw material be calculated? That's a requirement in terms of measurement of raw material. Now we understand under IND AS 2, the measurement criteria says that inventory needs to be measured at cost or NRV, whichever is lower. All right. And then with respect to the raw materials, there is a specific requirement wherein we say that if the finished goods are expected to be sold at a price below cost, the raw materials need to be measured at NRV. That's the underlying principle as far as the valuation of raw material is concerned. That is, if the finished goods are expected to be sold at a price below cost, at that point in time, raw material need to be also measured at net realizable value. And so let's try to find if that information is available. We are given that the raw materials have a cost of 600 rupees per kg, and specifically it is mentioned that the finished goods are expected to be sold at a price below cost, which means that this principle is valid as far as the valuation of this inventory is concerned. So how much is the inventory that we have got? We got 10,000 kgs of this inventory, right? But we're also provided, since we do not sell this inventory separately, the realizable value of the raw material cannot be arrived at. So how do we deal with this? Well, in such cases, it's important to observe, is there an alternative measurement criteria? Is there an alternative value which can substitute and become the net realizable value of that inventory? Okay, we are provided, by the way, the last statement suggests that the current replacement cost is given at 500 rupees per kg. Now, what we say here is that the cost of raw material is 600 rupees per kg, but the net realizable value as an alternate to replacement, as an alternate to the net realizable value, we have the replacement cost, which comes at 500 rupees per kg. How many number of units that we have got? We've got, of course, 10,000 units with us. So which means that while my cost would have been 60 lakh rupees, I need to report my inventory at 50 lakh rupees. And that is where the valuation of the inventory be done at 50 lakh rupees. The difference of 10 lakh, this has to be charged to statement of profit or loss, right? That's what you need to kind of bring into your solution when you are attempting this kind of a question. Let's have a look at the detailed solution around it. It says that as per IND AS 2 inventories, material and other supplies held for use in production are not written down below cost if finished products are expected to be sold at or above cost, right? But in our case, it's provided with the cost of finished goods exceeds net realizable value, The materials are written down to the net realizable value. And in the given scenario, replacement cost may be the best available measure of the net realizable value. Accordingly, the raw material inventory will be valued at 50 lakh rupees. All right. Thank you very much. We have learned the concepts under IND AS 2, that is inventories. What you want to do now is apply that learning with the help of several questions to test our knowledge of those concepts. Okay. So what we have got is the question in front of us where it's provided that there's a company called as Popular Limited that acquired raw materials at 600 rupees per kg. Now, this would be my cost of the inventory. Okay. The acquired raw materials are used in the manufacturing of finished goods and are never sold to third party as raw materials. Of course, raw materials are meant for self consumption. Okay. And these are not sold separately. The finished goods that company is making, these are expected to be sold at a price below its cost. Okay, so I just want to kind of remind myself that the finished goods are sold at a loss. Now that would bring me the concept back in terms of if I were to think of the value of the raw material, because the raw material themselves are not sellable anywhere outside, then the raw material basis the value of the finished goods need to be determined, which means that if the finished goods are sold at a at a price below the cost, the raw materials also need to be reported at the net realizable value. Okay, that's what you want to remember. But let's still go through the further requirements. It says that 10,000 kgs of raw material is still in the inventories. Okay, the selling price is not known because it is never sold separately. Just an add-on information. The question is giving us a confirmation that you're always using this inventory for self-consumption. No independent price is available. Okay. Accordingly, the realizable value of raw material cannot be arrived at for inventory valuation. However, current replacement cost is provided at 500 rupees per kg. Okay, so what is the requirement of the question? Very, very straightforward. It asks us, how will be the value of raw material calculated? Okay, now imagine we're talking about the valuation of raw material, wherein we say that we normally use it at cost depending on the value of the finished goods. If the finished goods are being sold at a profit, then the cost is an appropriate valuation criteria for the for the raw materials. However, if the finished goods themselves are sold at a price less than cost, then the raw material also required to be valued at net realizable value. The prudence concept comes in here, of course. Okay. And in the scenario, of course, since the finished goods are being sold at a price below the cost, the raw materials as well will be, will be measured at the net realizable value. And since the net realizable value is generally not available as far as this scenario is concerned for the raw materials, I think the most appropriate valuation of or the measurement for the net realizable value for the raw material could be taken from the replacement cost itself. So what are we trying to say is that the inventory of raw material needs to be measured. So if we have 10,000 kgs, we need to multiply that with 500 rupees, which means that 50 lakh rupees is the value of the inventory as far as my books is concerned, right? The cost was 60 lakh rupees, which is 10,000 kgs into 600, which means that the difference needs to be written down as loss through statement of profit or loss. All right, that is how we are looking at addressing the requirement of the question and of course deal with the scenario. Okay, now if we quickly just go through what is provided as a solution, it will be confirming what we have done so far. It says that as per IND AS 2 inventories, material and other supplies held for use in the production of inventories are not written down below cost if the finished goods are expected to be sold at or above cost. So it really comes with the same thought process what we just discussed. However, when a decline in the price of raw materials indicates that the cost of finished products exceeds net realizable value, okay, then the material are also written down to net realizable value. And in the given scenario, replacement cost of the material may be the best available measure for the net realizable value. All right, which means that my balance sheet must report the inventory at 50 lakh rupees, which is 10,000 into 500. All right. मैंने पूरा रिकॉर्ड कर लिया, मतलब वहाँ पे रिकॉर्डिंग का बटन दबा हुआ था। नहीं दबा हुआ था? मैंने नहीं, मैंने उसको स्टॉप किया था, अभी भी चल रहा है, अभी भी रिकॉर्डिंग हो रही है, सो आई विल कट दैट इन बिटवीन, आई एम टेकिंग अ सेकंड सिनेरियो। बट दबा भी गया था, हाँ हाँ तुम गए थे, उसका मैंने ना उसको स्टॉप किया था कि आई वुड स्टार्ट अफ्रेश। वो बटन दबाया तो मुझे वो पॉपअप दे रहा था व्हिच आई डिडंट रियलाइज। एनीहाउ यही टाइम पास होता रहता है, आधा घंटा लग गया, 10 मिनट की रिकॉर्डिंग भी नहीं हुई है। We are provided with this situation wherein there's a company called as Beta Limited. It says that Beta Limited has customized a solar power panel during 2019-20 based on the requirements provided by the customer, which means that Beta Limited is a seller and it is building an inventory of the solar power panels to a customer, okay, basis the customer's need. Now, the customer is facing a cash flow crisis and has requested Beta for a change in the delivery schedule, along with a request to withhold the delivery of the panel and discontinue the production. All right. Now, because of that, what happens? Let's have a look at it. It says that due to the above request from the customer, the below line items relating to the transaction are appearing in the financial statements on 31st of March 2021. So this is the reporting date wherein we have provided that this much, these balance transactions are remaining. We have a work in progress of 8.5 lakhs, finished goods of 5.5 lakhs, and sundry debtors of 6.5 lakhs, which makes it 20.5 lakh in total. Okay. Also, Beta Limited has moved a petition for winding up against the customer in 2021. What is the requirement of this question? It says that provide your comments on the provision of this 20.5 lakh rupees to be made on the balance of sundry debtor, work in progress, and finished goods in the financial statements for this year, which is 2020-21. Okay. Now, importantly, what you would like to remember here is that there are two categories of assets. We have inventories, where we use, of course, the reference of IND AS 2, and we have debtors, which is a financial asset. All right. And that is a financial asset. So I need to use the reference of IND AS 109, that is financial instruments. Okay. What does my IND AS 2 say? What does my inventories accounting standard tell me? It says that simply the inventories are measured at cost or net realizable value, whichever is lower. Right. Now, in this scenario, by the way, we are provided with the cost of inventory, which is 14 lakh rupees combined for the work in progress and also the finished goods. But are we provided with the net realizable value? The answer is no. So we need to derive that thought. If this information is not available, should we necessarily assume that the net realizable value is less than this 14 lakh rupees, which is the cost, or is it more than that? All right. That's an important thing to always consider when such kind of questions arrive. We need to take both the alternatives and explain that part to the to meet the requirements of the question. All right. We would want to address it in a way where we say that if the value of the inventory, if the net realizable value of the inventory is more than the cost, We do not have to do anything and we continue to show it at 14 lakh rupees. But if the value of this inventory is less than this cost, then naturally we need to write down that inventory to the extent of the difference. Okay, so let's try to talk about it like that. Okay, given this scenario, so we'll be addressing the inventories requirements first, and then we'll come to the receivables requirement after that. In this scenario, Beta Limited has customized the solar power panel, and we know that this inventory is lying with Beta because the customer has requested for a delay in the delivery of the particular panel, right? So the inventory is still in the books of Beta, and it would be measured at cost or net realizable value. Okay. Now, if there is a market, okay, assuming that the solar power panel has a market and it can be sold at a price if it can be sold above cost, there is no change that is required to be done. Okay. However, if the inventory being a customized one, if there's a customized inventory and there is no market or customer for the solar power panel, it simply means that the entire inventory has to be written down to a nil value because it cannot be sold practically. And that is where this nil value becomes the net realizable value. And the entire 14 lakh rupees will be charged to statement of profit or loss, right? That's the way you want to address the measurement criteria for this inventory in this scenario. All right. Now, on this other hand, if you look at the debtors, that's the receivable part, there's a clear indication since Beta Limited has moved a petition for winding up against the customer, it's a clear indication of an impairment of the receivable. Okay, which means that the 6.5 lakh rupees needs to be provided for as an impairment loss in the financial statements of Beta Limited for the year ended 2020-21. Right? Let's try to understand. Let's try to look at the formal, solution of this and see to it if it connects with the discussion that we have done. We're looking at the step one where it talks about valuation of inventories. It says that based on the information provided, Beta Limited is a manufacturer of solar power panels and inventories are defined as assets held for sale. In the ordinary course of business, of course, we refer to the finished goods in the process of production for such sale, which means we are talking about work in progress, and we're looking at in the form of materials or supplies to be consumed, which means we are talking about raw materials here, right? Accordingly, the solar power panel in the inventory will be classified so and valued at cost or NRV, whichever is lower. Now, since the customer has requested for a change in delivery schedule due to the cash flow crisis, the total cost is appearing in the inventory, 14 lakh rupees we talked about. It should be measured at the lower of cost or NRV. The fact that the solar power panel has been customized does not have an impact as the goods may be saleable to some other customers also. Okay, and that's what we were trying to say. If the goods have the market, doesn't make any difference to the value of the inventory. Okay, which means that if the cost is lower than the net realizable value, you continue to show the inventory at its cost, which is 14 lakh rupees. Okay, and then since the solar power panels are customized, since if it is assuming that, of course, the customized solar power panel do not have any market, okay, which means that no customer is available, then the net realizable value would become nil, and the entire 14 lakh has to be booked as or has to be written off in the books as a loss, right? So that's the first category of our asset, which is the inventories of work in progress as well as finished goods. Now, the other category of the asset is the sundry debtor, where we are referring to IND AS 109. Now, considering the fact that Beta Limited has moved a petition in the court of law for winding up of the balance of the customer, it provides an evidence that, of course, the receivable of 6.5 lakh rupees is impaired and it is not recoverable, which means that the company needs to make a provision for doubtful debt, provision for loss of this entire 6.5 lakh rupees in its financial statements. Right? Thank you.